Welcome to TMS Insights. It's the February reporting season, so busy here at TMS, and this is the first lot of Australian stocks that have reported over the last 2 weeks that we're going to talk about today. But before we get into it, a theme which has been in the press, of course, Ben, that we need to just talk about generally, because coronavirus will be mentioned through most of the company reports in some way, because it's having a bit of an impact and companies are trying to give some clarity around it. But clearly, where we understand it today, most of the reporting has started to die down in numbers, Ben. So looking at that chart shows a bit of it.
Yeah, we thought we'd just put up a chart here that sort of shows there does appear to be a drop-off in the number of cases, which is great news. And secondly, there's also a much higher proportion of people who are getting corona are living. So that's also good news. So hopefully I don't think we're close to the resolution of it, but...
And this looking a lot like SARS in that way, in the spike Ebola. And then the Ebola.
Yep.
And it would explain the calmness the market's had about the whole thing, because people have been asking, why isn't the market a bit concerned? And clearly the market does deal with one-off issues and concentrates more on recurring things.
Definitely. And I think also the market can see that it's highly likely the Chinese will launch a massive stimulus package once this has been contained and dealt with. And they're actually, there could be some good news to come out of it, which for many businesses. But
one bit of good news was the decline in the pollution in the major cities, a 27% decline in pollution.
Yeah.
Unfortunately, that's going to be a one-off as well. But we are getting some earnings impact in our Australian companies, most of them who have some dealings with China. Let's look through some of these reports, though, Ben. One of the earlier ones to report in the season, one we always like to hear from, is REA Group. So that was really good. Maybe we'll put into their car sales, because I thought both those were good results, but pretty good reactions in the market too.
Yeah, I think that they were good results given that conditions were very tough for both the businesses, because we'll run through a lot of these fairly quickly. But if you just think that these companies are reporting on July to December, and it was a very different environment, it feels like, back then, particularly in the housing market and in the car sales market.
Yeah.
So I think both these companies have shown their qualities in that they were able to hold up their earnings in tougher times, but the outlook's definitely improving.
Yeah.
So the coming 6 months should be really quite strong.
Yeah, so we don't feel they're necessarily cheap on their current earnings, but that outlook, like Ben said, is good.
Yep.
And they're terrific companies, which we've liked and continue to like with these numbers. Magellan Financial Group had good growth in FUM, and their two new funds have kicked them on a bit. I think it's been well described as one of the most expensive fund managers in the world.
Yeah.
But credit to them, Ben, cracked through that $100 billion.
Incredible. And it's stayed expensive, because I certainly felt like this might have run its course in the short term, but it's just continued to go. The performance of the fund's been good, and that will mean that performance fees will keep flowing through. And Hamish Douglas did say on the call that it sounds like they're getting closer to this retirement income product, where none of us really know what that is, but that's going to be launched.
Built a lot of excitement around this, so we're hopefully
it's very good
at that. You mentioned expensive stocks. Now, somebody would naturally say a stock of $330 or $220 was expensive, but I'm talking now about CSL and Cochlear, two biotechs that reported in this period. Terrific companies, Ben. The CSL result was great again.
Different results, so because CSL had an upgrade, but it largely expected by the market. So there wasn't a big reaction in the share price, which has risen like 50% in the last year or something. It's extraordinary. Cochlear had a downgrade, but the market looked through. But
that was only this morning, its report, so it's not down much, is it?
No.
It seems to have held up pretty well.
Yeah, and look, China's the 5th largest market for Cochlear, and what they've said is that Chinese hospitals have all cancelled non-life-threatening surgery. So it's kind of a timing issue. The patients that were lined up to get the cochlear implant surgically put into their head, that'll still occur.
And this happens, doesn't it? We've watched this stock for a long time.
Yep.
And there's the cycle of replacement.
And that's the other thing. So Cochlear is morphing in from, profoundly deaf people to people who've got hearing loss. It's a much bigger market, under-penetrated. And they've got a new hearing aid which is going to be approved by the FDA in November. It's going to be released shortly. And what we typically see is that the doctors and the specialists knowing that this is on the way, will drop off the recommendation to get the previous product because it's going to be aged fairly quickly.
Yeah.
So Cochlear can be one to keep an eye on because this can be a good time to look at it.
BHP reported today underlying profit after tax up 29%. No special div, but a good
which was a bit of a surprise.
But they made a few coronavirus comments, which are obviously natural, but they had a good year.
Definitely. Yeah. And when you look at where iron ore was last 6 months, a lot higher than where it is today. Yeah. But if we see a big stimulus package come through from China, I guarantee you there's a lot of steel in demand and that'll throw through to the iron ore price. So again, it feels like the market's sort of seeing a brighter future than where, you know, iron ore's at around $80-83 at the moment. It was, I think the average price they were getting for it last year was about $109 US. So it's quite a big drop from where it was.
Still massive cash profit on those. Altium reported overnight a very good result again, and hard for a company which has risen so much to keep up with expectations, which are lofty, but really good numbers, Ben, overall. Yeah,
they reaffirmed earnings guidance, although they are going to land in the bottom half of earnings guidance, it sounds like. So they've got a decent China business, which they've forecasting will have a slowdown due to coronavirus. They've also got a big electronic parts business called Octopart, and at the end of the last half, a lot of US industry was stockpiling electronic parts because they were worried the trade war was going to blow up out of control and they wouldn't be able to get parts. So there's an excess inventory of parts at the moment, which they said is going to take a bit of time to work through.
May have been a bit prescient noticing coronavirus, etc.
So but one-offs, and I think they're still moving towards the 2025 goals, so still it's pretty good.
The China-facing stock that didn't do so well was Blackmores in this reporting season. So again, their quarterly numbers looking quite worrisome this time around.
Yeah. So the coronavirus has caused chaos for this business. There's no Chinese coming out to Australia who typically stock up on vitamins to take back home. There's a big spike in demand in China for vitamins, but they can't get the product to the customers. And there's all sorts of side effects. You know, they were saying that the glass jars that pretty much all of their vitamins are put into come out of a factory in Shenzhen, and that factory's closed and they don't know when it's going to reopen. So, but some of the problems are of their own making. They bought this Braeside plant, which has not turned out the way they told the market to expect. And there's been a lot of management turnover as well, which is never a great sign.
Never. Combank was a good result, Ben, overall. I mean, they haven't had a couple of wonderful years altogether, and the banking industry has had a lot of chaos through it, Royal Commission related. But a really strong reaction. The share price has been really good. Now, by the time viewers see this, it'll be the $2 fully franked dividend. But it's been on the top side of $90.
I've been really surprised because Combank's nearly trading on a P of about 18.5, 19 times, which I don't know if you can, I can't ever remember it trading on that
it's back to its highest ever multiple.
And it's certainly not as good a time for the bank as it was when it was trading back on that multiple. NAB had a good trading up. I actually thought that was better than Combank's result.
And that's what we have been saying for a little while. With the new leadership at NAB, it's got the greatest catch-up. Its numbers are clearly cheaper. But as you mentioned, it's quarterly numbers, not a full report for NAB in this season. Another bank that gave an operational briefing was Macquarie. Shamira Ramanayake did an excellent job in presenting a case for all the business units. And Macquarie continues to find new highs.
Yeah, despite reconfirming that earnings will be slightly lower this year than last year, and I still think the market is believing they're being too conservative and they're going to see some growth for the year. But I think I know you listened into the briefing, and it's a full day long and about 150 slides of information, but the long-term outlook for this business, I just think with all that's going on in the world and the interest rate settings, the demand for infrastructure, they're moving into green energy, it sounds like they see as a big opportunity. It just feels like they're really well placed for a lot of years of growth, and that'll be a bit lumpy year to year, but it's a great business to own.
And last Thursday, a big ruling in the Supreme Court about the merger Vodafone was planning with TPG that the ACCC blocked. The court overruled that block and the merger can now proceed. So this was a big win for TPG, which is now moving solidly into the mobile business and has a fully full offering in telephony now.
Yep.
And great for its 25% shareholder, Soul Patts.
Absolutely. The telco industry has been so tough for a number of years now, but you remember before that, it was the place to be for many years. We have Vocus, M2 Telecommunications, AAPT, Pipe Networks.
Which these are all now merged effectively. So the competition is massively reduced.
Yeah. And if you think back to that time, it was as they were going through that process of bundling up offerings and bringing on customers that they could service at much lower cost. It was a brilliant time to be a telco owner. So Salt TPG, I think, should do well over the next few years, and Salt, that benefit will hopefully really flow through to Soul Patts, which is close to its year low and looks pretty good value at the moment.
Yeah, great. Challenger has been challenging, but this time actually turned probably 2.5 years of disappointing results back on its head. The numbers were good, and the confidence that we'll get from seeing some delivery rather than promises will help the stock. It's over $10 again.
Yeah, I'm glad we stuck with this one, because I think a lot of the headwinds that were buffeting Challenger were really out of its control, and I think they've done very well to reposition the business for growth going forward. The CEO was a lot more optimistic about the outlook than we've heard him, and I think it's very likely they'll actually upgrade the year's earnings as we get closer to June. I think it's sort of a bit gun shy given what happened over the last year or two. But the big thing that's happening here is Challenger is moving into selling annuities for industry super funds and pension funds as opposed to mum and dads. And it's a massive market, and they dominate the market. So, I think definitely stick with Challenger. Still good outlook.
That's good. Well, that's all we've got time for this update. We'll be bringing you again another series of reporting updates at the end of February.